Are we witnessing a new wave in decentralized finance? We are now seeing the perpetual futures market growing further and further, and now Avantis is outperforming everything else. Let's have a look at whether or not it still makes sense to buy into the token. Let's have a look at the on-chain metrics. Let's look at the data most people are not considering. It all started out with Hyperliquid, which now has a market cap of 14.4 billion. Hyperliquid is the market leader in the space, and we talked about it when the price was still at $24. That was 9 months ago on the 15th of December of last year. Now, of course, we have more than doubled in the price in Hyperliquid. And then we talked about ASTA, or the APX token. That was 3 days ago when we were at 62 cents. Now we are at $1.53. And so this then begs the question, is Avantis as the third player in the market still worth investing? Is the current price compared to the competitors rather low or rather high? Let's have a look at the metrics. Let's first compare market caps to get an idea of how risky Avantis actually is. Hyperliquid is at $17.6 billion. ASTA is at $2.5 billion. So roughly 1/7 of the size. And now we've got Avantis with only 580 million market cap, which is again quite a bit smaller, as in 1/5, 1/4 smaller than ASTA. So we are progressing more and more risk on the platforms to get smaller and smaller. And so hopefully the upside potential is getting larger and larger as well, because otherwise why would we take on more and more risk? Hyperliquid has a total value locked of 2.8 billion. ASTA has a total value locked of 400 million. And it's also got the backing by CZ and Binance. And it's got a very positive momentum as well. Now here we've got the total value locked of Avantis. So how much capital is currently in the perpetual futures exchange that's behind the AVNT token? Now what's the differentiator of Avantis versus those other two platforms? The first one is we do have some products that aren't traded on the others. So besides just cryptocurrencies, we've also got commodities as in gold, but we've also got currencies as in we can speculate on the euro versus the US dollar, etc. That's differentiator number one. Differentiator number two is that it's simply on another chain. It's on the base chain. We've also seen recently the introduction of equity trading. Again, something that Hyperliquid doesn't do yet, but ASTA definitely is. What kind of equities? Pretty much the same that ASTA is also offering. So Coinbase, Nvidia, Apple, Amazon, Microsoft, all those big tech companies. Now, since we're going further and further up the risk curve or down the market cap, we also need to see more and more momentum, right? We take on more risk, so we should see more growth over time. Now, how much usage do we actually have of Avantis? Let's compare. So this is the fees that get generated on the Avantis platform over time. And yes, there is some growth. It's actually quite a lot of daily fees compared to the total value locked. But of course, something between $50,000 and $100,000 per day cannot compare to the metrics of Hyperliquid that's in the several million per day. Now there's always the question, when something is rising that quickly, is this potentially a pump and dump, or is this all fundamentally driven? Because especially when a price appreciates very quickly, people tend to at some point also take profit. In less than 2 weeks, we have seen more than a 10x in return. And there are some data points that are worrying. For example, the tokenomics of AVNT. This is the number of AVNT tokens over time. We are currently at 200 million, and this will grow all the way to 1 billion in the span of 5 years. We have unlocks from the very beginning, and the team will be able to start to cash out 1 year from now. Why is this so worrying in the context of perpetual futures exchanges? It's worrying because it reminds me of something. Have a look at this. This is DYDX. This was the first relevant decentralized perpetual futures exchange that got significant traction, and it also grew to close to 1 million tokens. Now here is DYDX relative to Bitcoin. And of course, at the beginning, there was a lot of hype. In the first days, we did see DYDX outperform Bitcoin by 184%. Of course, less than what we now see with Avantis, but still, the long-term tokenomics took over. And so over time, the more tokens hit the market, the more the price went down. How much? You might wonder. The answer is 98%. A very constant underperformance. This is on a logarithmic scale. Here's the same on a linear scale. Now, I'm not saying that the exact same thing will happen for Avantis. It obviously depends also on how much adoption the platform will get over time. But the tokenomics are definitely aggressive. So whoever now buys into Avantis in order to hold this for the long term is expecting for the TVL not to stay at 20 million, but to go to 100, 200, 300 million and above. Right now, there's a lot of leverage in the price, and this is somewhat worrying as well, because short term, the price determination actually does not happen on the spot market. It also happens on the perpetual futures market, so on the levered bets on the price. And levered capital can very quickly also exit a token. In the last 24 hours, we saw 1.3 billion worth of trading volume on the spot market for Avantis. Compare this with the perps. Here we had 3.7 billion worth of trading volume. That was on Binance. The open interest is going up over time. It's now at $184 million. And that's more than a quarter of the entire market cap. So at that kind of open interest, it might make sense for the market makers to manipulate the price in a direction. If a lot of people bet on falling prices, the market makers just buy up the token. If a lot of people bet on rising prices, the market makers might sell. And we've actually seen exactly that for Avantis in the past. We've seen massive short interest and then subsequently the price rising very quickly from 21 cents to 34 cents. That's the classical case of a short squeeze. You've also seen a short squeeze over here, and now recently we're getting slightly negative in open interest again. And with those short squeezes, of course, the shorts get liquidated, which we saw quite a bit of just yesterday. So I'm not yet convinced of the fundamental story. I'm also not convinced of the valuation. I think currently we just see a lot of speculation within the perpetual futures market because Hyperliquid has grown that much, and now Binance tries to get into the space as well. And Avantis is now the bet for the base chain. And yes, it could grow from here. But right now, given how much short-term speculation there is on the perpetual futures market, it's a very dangerous play. We go more and more risk on over time, and the question really is, does this additional risk still get compensated? I've got my doubts. Yes, the upside for something like Asta might be less compared to Avantis, but I think the risk goes down even further. So risk adjusted, Asta is probably the better play. Now here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is balancer relative to the others market cap. So how is the balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to balancer. So we bet on rising prices of Bitcoin and on falling prices of balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I'll refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me. Because I will not just share this one trade, I will of course share every trade that I do myself as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.